Bitcoin's $10 trillion explosion. Are you ready? Disclaimer: this video is not financial advice. Always do your own research before making any investment decisions. Bitcoin is at a tipping point, and the next 12 months could change everything. With institutional money flowing in at record levels, the question isn't whether Bitcoin will reach new all-time highs, it's how fast. Some analysts predict Bitcoin will skyrocket past $1 million per coin, while others say we're about to witness the biggest wealth shift in modern history. Will you be ahead of the curve, or will you be left behind? In this video, we'll break down the latest Bitcoin spot ETF boom, the 2024 halving impact, and why governments and hedge funds are scrambling to secure their positions. We'll dive into why Bitcoin's supply crunch could trigger a historic price surge, the role of central banks and sovereign wealth funds in Bitcoin accumulation, and how the macroeconomic landscape is pushing financial institutions to rethink digital assets. By the end, you'll know 3 reasons why this could be Bitcoin's most explosive cycle yet, and how you can prepare before it's too late. Reason number 1, the institutional Bitcoin takeover. The approval of Bitcoin spot ETFs in January 2024 was a watershed moment. Almost overnight, institutional demand surged, with billions flowing into funds managed by BlackRock, Fidelity, and other financial giants. BlackRock's iShares Bitcoin Trust, IBIT alone, has seen inflows exceeding $37 billion, proving that institutional investors are now treating Bitcoin as a core financial asset. But why are the biggest players in finance suddenly going all in on Bitcoin? The answer lies in macroeconomics. Central banks worldwide are struggling to control inflation, and traditional safe havens like gold and bonds are failing to deliver the returns that institutions need. Bitcoin, with its fixed supply of 21 million coins, is emerging as the ultimate hedge against inflation and currency devaluation. Wall Street sees what's happening, and they're making their move before the rest of the world catches on. It's not just hedge funds and asset managers piling in. Pension funds, corporate treasuries, and even major tech firms are starting to allocate Bitcoin as a strategic reserve asset. Tesla and MicroStrategy were early adopters, but now companies like Apple and Google are reportedly exploring digital asset strategies to hedge against economic uncertainty. The writing is on the wall. Bitcoin is no longer an outsider, it's a financial mainstay. Reason number 2, the US government's secret Bitcoin strategy. What if I told you that the United States government is one of the largest Bitcoin holders in the world? The US currently controls over 200,000 BTC, worth billions, seized from various criminal operations. But instead of selling, as they've done in the past, there are growing signs that the government may be holding on to these assets strategically. Some analysts believe Bitcoin is quietly becoming part of national economic policy. As the global financial system shifts, Bitcoin could serve as a digital reserve asset for countries looking to hedge against dollar instability. This is especially relevant as major economies like China and Russia explore alternatives to the US dollar in global trade. Whether intentional or not, the US is sitting on one of the most valuable Bitcoin reserves in the world. The question is, will they continue accumulating? Beyond the US, other countries are beginning to follow suit. El Salvador's experiment with Bitcoin as legal tender was just the beginning. Reports suggest that countries with unstable economies, such as Argentina and Turkey, are exploring Bitcoin as a potential hedge against hyperinflation and currency devaluation. If governments start competing for Bitcoin reserves the same way they do for gold, we could see an entirely new geopolitical race for digital asset dominance. Reason number 3. The 2024 halving and Bitcoin's next supply shock. Every 4 years, Bitcoin's halving event cuts the rate of new Bitcoin issuance in half. Historically, this has always led to explosive price growth due to simple supply and demand economics. The April 2024 halving reduced the mining reward from 6.25 BTC per block to just 3.125 BTC, meaning fewer new coins are entering the market while demand continues rising. If history repeats itself, we're on the verge of an enormous rally. The 2012 halving triggered an 8,000% price increase. The 2016 halving led to a 2,000% gain, and the 2020 halving saw Bitcoin surge over 500%. Analysts from ARK Invest and Fidelity predict that this cycle could push Bitcoin to $250,000, with long-term projections eyeing the $1 million mark. If supply continues to tighten and institutions keep buying, the next leg up could be the biggest yet. The impact of the halving is further magnified by Bitcoin's diminishing exchange supply. Data from on-chain analytics shows that the amount of Bitcoin held on exchanges is at its lowest level in over a decade. Miners, long-term holders, and institutional buyers are keeping Bitcoin off the market, creating an extreme supply crunch. This scenario, combined with increasing global adoption, could create a perfect storm for a Bitcoin price explosion unlike anything we've seen before. So, what comes next? The pieces are coming together. Institutional investors are accumulating, governments are holding, and Bitcoin's supply is shrinking faster than ever. But the biggest wealth opportunities always come before mainstream adoption. The people who waited until Bitcoin hit the headlines in previous cycles bought at the top. Don't let that be you. The next phase of adoption could see even bigger players entering the market. With ETF approvals setting a precedent, we may soon see sovereign wealth funds, Fortune 500 companies, and even central banks adding Bitcoin to their balance sheets. If this happens, the supply-demand imbalance could become even more extreme, leading to price surges that few are prepared for. The question isn't if Bitcoin will reach new highs, it's whether you'll be positioned before it happens. The final phase of adoption is approaching, and the smartest investors are already making their moves. Are you? Drop a comment below with your Bitcoin price prediction for this cycle. Subscribe now to stay ahead of the biggest financial trends.